Probably the biggest question or the most asked question that I get is, Dan, should we lock or float our rate? So if you guys are unaware of what those terms are, basically when you put in a mortgage application, you have the option to lock in the rate right now, meaning you got the rate, you're done and you don't have to worry about it anymore, or you can float it. You might float thinking, well, mortgage rates might come down. That'd be about the only reason why you'd float, or your closing isn't for a long way out there. So I get where people are really concerned about that. So I watched the Federal Reserve, Federal Chairman Powell in front of Congress, and they grilled him for a couple hours. Okay, I watched it. It was basically a yawner. There wasn't anything of substance that I was hoping for. But as I watched the congressional meeting, I'm like, okay, the Dow Jones, all the markets are doing a little bit better. And then I saw bond yields starting to get a little bit better as well. Mortgage rates coming down. And I'm like, what's going on? So am I missing something? So I started digging in a little bit more and a little bit more. And then I go to headlines and I'm like, everything still tells us Federal Chairman Powell sees, inflation a long, long way off. And there's still captions in here. They're raising rates 2 more times. I didn't hear any of that in the data. So right after that, or right before I'm ready to do this video, I'm seeing the markets right here stabilize. They're up 5. They were down 33 this morning. Okay, it's right through here. And I'll get to that in a minute again. But then I get this alert, and it just came 25 minutes ago. Here's what the alert said. Let me read it in full context to you. MBS is back in positive territory, and I'm going to wrap all this up in a bow for you here at the end here in a second. Bonds began to recover during Federal Chairman Powell's congressional testimony, not because he said anything particularly soothing or unexpected, but rather due to the no whammies phenomenon. And what is that no whammies phenomenon? Well, in other words, Powell didn't say anything to suggest the Fed has already decided to hike at the coming meetings. Okay, you see it? So he didn't say anything about that. He didn't say it. Mainstream media is telling you there's 2 rate hikes in. They're perfectly confident of that. Other media is telling you the same thing. But when you listen to his verbiage, he's not telling you that. He's saying we're going to continue to monitor the data meticulously. So what we saw previously last week, right when the Federal Reserve was announcing what they're going to do, the CPI, consumer inflation, and PPI, the producer price inflation numbers, came out right at that time. And they were down lower than all the analysts expected. So it's positive news that front. On the employment front, that's a whole nother story, and we can talk about that in a whole nother time. But I couldn't find anywhere that said the Federal Reserve is going to raise rates 2 more times. Now, if you look into the tea leaves and you go to the Chicago Mercantile Exchange, the Chicago Mercantile Exchange futures markets is saying the Federal Reserve is going to raise rates 1 more time, 0.25%. Are they? Are they not? Are they going to? I don't know. We don't know. Nobody knows. You don't know what's going to happen in the next 30 days with our economy. So set still, folks. This is where I try to explain to people you can't always trust mainstream media, and you can't always trust the YouTubers out there to educate you guys with the facts behind all this information. If you'd like to find out more about me and my team to educate you guys and maybe inform you on the numbers behind looking at real estate in 2023, all you have to do is visit us at therateupdate.com.